Everybody, welcome back to Selecting an Option Strategy. My name is Mike Fairborn, sitting in for Connie Hill, who's out. Expect to see Connie, though, back next week, folks. Looking forward to our discussion today, really going through a process and looking at ways that, traders, investors might try to select an option strategy. What are we seeing in the markets? Are we seeing strength, weakness? What might we anticipate, bigger picture, and how might the market influence what we are doing when we actually go through the process of selecting an option strategy? So, look forward to going through that with you today. We'll definitely take a look at some indicators as we go through this. We'll be looking at trends, price patterns, etc., to kind of help us along this path in selecting an option strategy. And looking forward to this class, folks. It's great to be with you. I have not taught this one before, but just looking at Connie's playlist, which I'd encourage you to take a look at if you haven't, if you're new to this class, I haven't seen much of it. She goes through a pretty extensive playlist just covering different topics. And so what a fun class to actually go through, specifically with options, something I'm inherently interested in as well. I'd like to welcome in here, too. I'm joined by my good friend, Kevin Horner, who's in the chat. Great to have Kevin here. Very knowledgeable on this topic and others as well. You'll see him in the mornings with his classes, does a great job on that. I encourage you to take a look at those. Now, I'd like to welcome each of you here today, too. TM, good afternoon to you. And to all, Kevin, hello. Riceberg, how is it going? Saw Riceberg, Kevin, TM earlier today. It's great to be with you guys. And I did see, I think, some of you, some others as well. Scott, aloha, Bob, Trader, David, how's it going? As well as Naresh and Will. All right. Yes, we are back for some more fun. It is fun. That is a good way to look at it. How's it going, BJ? Yeah, options are very interesting, and I'm looking forward to getting into it. But before we do that, we do need to dive on in to some disclosures to get started here. So let's do that first. Options carry a high level of risk. They're not suitable for all investors. The information here is for general information purposes only. All right. The paperMoney software application is for educational purposes only as well. Now, investing does involve risk, including loss of principal. With long options, investors may lose 100% of the funds invested, right? The debit. Spread trading may be done in a margin account. Multiple leg options strategies involve multiple transactions. I'm hitting those because we're going to be looking at those today. All three of them. We'll look at those. Final slide here. As we journey forward, folks, past performance of any security strategy does not guarantee future results or success. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. ITM option does have a higher risk of being assigned early. All right. With that, let's get into it right now. I'm going to pull up. Oh, gosh, I've got to drag this up. Did an earlier class, and there we go. Got it all ready to set to go now, though. Here we are. So we are looking at the S&P 500 index right now. And folks, just generally speaking, big picture, there's no doubt about it. There is strength in what we're seeing here. I don't know about you, but for me, I'm seeing a little bubble over here that says high. Maybe you're not seeing that. I'm kidding. I think you're probably all seeing that. Folks, that's an all-time high on the S&P 500 index. So what does that tell us? Well, maybe there's some bullishness in here. We've got a low down here on the year. We're up towards the high, not just on the year, but it's an all-time high as well, right? That is a very long term. I've got a max chart here of the S&P 500. Well, taking us back to 99. We've had a lot of upward moves. We've had some range activity, but my goodness, there has been a lot of upward trends. Is it safe to say we might have the long-term trend on our side? It is. At this point, just looking at the chart data, short-term, yes, indeed it is. In fact, let's just draw a couple more lines in here while we're at it. I'm touching off a couple of different points there. That was resistance. It did not prove to be futile. We broke above it. There was a bit of this going on too. Kind of, sort of, in development of. We could have gone down and maybe hit one more low in here, but an ascending triangle on the markets. And oftentimes, those price patterns, folks, they are just prone to upside moves or, descending triangle. This is in fact an ascending triangle in the direction of the upward trend. A lot of times it'll break in the direction of the trend. Fascinating to see. I threw this out here for you because we recognize this. We went to this in the last class I taught, markets and sector analysis, which I do teach on Wednesdays. If you are able to break this data down and look a little bit in more detail, I'm going to go ahead and just take these out for a second. I don't want to see extended, there we go, the extended hours. But what I wanted to show you here on the SPX, you just saw that ascending triangle that I drew on a longer term chart. Well, let's just go ahead and do it again on a 30-minute chart. Gosh, forgive me for not keeping a straight line in here. I do like the big thick lines though, so I'm using the drawing tool. On a 30-minute, so 30, not an hour, not a daily, not an hour, not a weekly, it's a 30-minute chart as well. So we had talked about this interesting support level through here. Boom. Can prices hold that? Well, we're above it, and we might be in another ascending triangle short term. Will that unfold? Oftentimes they do unfold with the trend. Now, not every time. Nothing is 100%, but there you have it. Wanted to throw that out there so you can see it. And why do we go through this? Well, we go through this because this is the market, and we do have, well, last time I checked, it's not exactly 500, so I can't say that, but it is the S&P 500. A lot of times it's 501, 2, or 3, or whatever. I've actually seen the S&P 500 498 when they dropped a couple companies out of there. So it's not exactly, but that's a lot of companies, whatever way you want to slice it and dice it, right? It's very close to 500. That's what they shoot for. If you're seeing that in the general market, folks, we may be seeing a fair number of sectors that are I mean, if we're at this level, what might be the next level of analysis we look at? If we're talking about options, which have a time element, right? And it's incredibly important to get things done within a given time frame because, well, we do have expirations occurring. Well, it can be helpful too to go ahead and just look at sectors, for example, a big, gigantic sector grid. Now, I have down here in the bottom right-hand corner of the screen, I've got the S&P 500 index right there. Now, you can see it again. It's breaking higher, but it's breaking higher based upon what we're collectively getting across the market amongst the other 11 sectors, right? I mean, look at this breakout. Industrials. Does that look like a high to you? Me too. I'll say yes. I'll answer for us. Yes, yes, yes. I mean, it's taken out the last highs. Over here too, discretionaries. The staples are already into a high range. Look at the trends over here for utilities, real estate. These can all be a component, and they can be interesting areas to look at. Now, one thing I wanted to point out too is that we do have a lot of companies within this group that might fit within an index like the S&P 500. It could fit within the NASDAQ 100 as well. We're definitely going to look into those areas today as we explore a couple of things. And that is this. That's the following. By the way, if you do want this script, this grid, let me know. I can quickly share it in the box. It's no problem at all. But it takes a little bit of time to set it up. Feel free to change the colors. If you do, I kind of like the black and green, but then again, I don't know how that's going to work for Kevin, for example, who has his own set of colors that he certainly likes to, check out. Okay, let's scoot on back here for a second, and let's go back to SPX. Now, as we look at the S&P 500 index, it is interesting to note that sometimes, and I posted this on my X handle, if you want to take a look at it, be my guest. It's just we really don't go into these in great detail, but key point here is S&P 500 returns after rate cuts. It gives you reference. Now, you'll notice that after rate cuts, especially over the last 40 years or so, you do see declines in the market, which can be tied into the number of rate cuts that come up. So there can be a couple of things that you might want to reference here. Earlier today, if you want to take a look into it, we talked about it in our market and sectors discussion, but the uninversion of the curve, the yield curve that is, well, that can create pullbacks in the market, generally between a 3-month and a 6-month and a 23-month after the uninversion occurs. That is when we're going above the zero line. So more on that if you want to take a look at it in that class. However, these are things to be mindful of because sometimes we can get pullbacks. So with a big run like this, we may be bullish because we've just shown a number of different characteristics of the market, strength being bullish, but we might also, especially as we've run up to high prices, and as we are trying to select an option strategy, when the market runs to high prices, so do the stocks within the market, within an index. NDX. That's right. That's 20,000 right there. That's 20,000. By the way, I've given a little bit of a zigzag run potential up here for the 100, and that would be pretty fascinating if, since we just broke these highs, if we have an extension of this leg, but that is still higher. That is still higher prices. Around significant rate cuts, we don't know exactly what to expect, but we can expect maybe some sideways action, maybe some volatility. I mean, that's a possibility, especially, sometimes the month of October, I think many traders are familiar with the month of October. There tends to be some volatility in the month of October. Okay. And sometimes a dip in October or to the beginning of October, whatever the case might be, it can vary from year to year. But we're getting in there, and so maybe we have a bullish scenario that might also have a neutral aspect there, but that we could also participate with purchasing stocks that are maybe, have driven markets higher, but are in, we can use maybe a spread trade to kind of capture the benefit of, these higher stock prices, and in a way make them more, or let's say less expensive is, I guess, the best way to put it, than they normally would be if you were just buying a straight call or a straight put. All right, in whatever direction we're looking at. In this case, though, it is for the upside. I can show that grid. Let me do that real quick right now. And for those of you that are viewing this presentation on just on a recording, I will go ahead and have that in the description section in YouTube, just under where it says more as well. So let me just go back to this right now. I'll share that sector grid. I think I actually have to go to it. Share grid. Yeah, there we go. And I'll share it. And there you have it. And here it is. Now, just as a quick note, anytime we share anything, it's always subject to the data that's coming into the platform in terms of, the accuracy and the data, etc. But this isn't really a script. It's just a grid. Anyways, there you have it. That'll save you a little bit of time in terms of setting it up. By the way, these are all, as you can see over here, just as a quick note, I mentioned it before, but they are 3 months worth of data. That's what you're looking at. 3-month daily charts. Okay. Good enough. Well, let's dive into the core portion of our discussion here. And so really what I was kind of considering today, looking at it in terms of selecting an option strategy, would be something along the lines of, well, a short put vertical. Does it not accomplish that? Higher prices. Let's pull this up over here on the left-hand side, just so you can see it. But look at some of these prices that you've got. I mean, they're not cheap. Look at the prices. I mean, many of these are in the hundreds, as you can see over here. Now, that's not all of them, but many are. And a short put vertical could help us kind of better position ourselves where the margin requirements might not be as high as well. All right. So let's look at this right now and go through a couple of these. I wanted to start off here first too. We say something like, I was looking at Microsoft, but here is Google or Alphabet. Here, so we're looking at it right now, and we can see that, with the NDX has not been as strong as the general market. When I'm saying the general market, the S&P 500 index, but it is bouncing back. And a couple of things that could catch our attention here is maybe just looking at some of the potential for flag patterns over here too. We're coming down here, and there is a bit of a flag pattern. Now, have we broken this high yet? We have not. Another reason why we might not be too bullish, but maybe neutral to bullish. One thing, and I don't know how many of you do utilize this indicator. I'd love to know how many of you do, though. Let me know, because I just don't find it too often. But the money flow indicator down here can be interesting. It tends to try to get a sense of, a cumulative sense of buyers versus sellers. Can you see how we're making new highs in that money flow? That's referred to as an early warning sign, or an early warning indication that we have a positive divergence on this, meaning that as prices went higher, we just had more volume come in. So the assumption is with this indicator is that we just have more buyers than sellers. And folks, do you like that? I mean, do you want more buyers to come in if prices are going higher? Short answer to that is, yeah, you probably do. You want to see some conviction there, because if you have buyers in there, well, it can help to extend trends, and a lot of times to move the money flow. you've got to have the type of buying that you would see on an institutional side. So institutional buyers, the big buyers, to move something like the money flow on something like a Google, you've got to have a fair amount. I mean, you can have the retail buyers in there as well, but collectively, as prices went up here, this volume, okay, if we look at it down here, so when prices are going up, it just adds all the volume to the upside. In other words, that's going to push the money flow indicator higher. If it's to the downside, it's going to push it lower. You don't get these all the time, but we just got a positive divergence, meaning that we took out this high in terms of money flow. Money flow took out this high, relatively speaking. Well, let me do this. Let me clear this off, and we'll start from scratch so we can actually see it. Now, if I go over here, you'll notice over here that we broke above that level. Do you see it? Money flow is higher. But yet, if I take the same line, gosh, and try to draw a straight line up, there we go. Maybe. You get the general idea. It's right over here. Notice over here that the measurement of money flow relative to prices is higher. This isn't an indication. And money flow is telling us, this is why a lot of traders will use it. It is telling us that this stock will break this high. Now, is it always perfect? Do we have an indicator it's always perfect? Absolutely not. But this is a rare one, a rare event that you get these divergences like this. And so it could be of interest. Google, for whatever reason, a lot of buyers came in. They maybe saw some value here at this low end. Now, could this be a flag pattern? Perhaps. We didn't make a new high yet, but we might be getting indications of doing so. So, if here we are, coming back down to the present where we're at right now, if we do this, I mean, basically, if we just sell a put, I'm just going to put an arbitrary line in here, and buy a put, we can create a short put vertical spread, right? We're selling the higher, we're buying the lower with anticipation of the stock holding above this level. It can go higher, it can go lower, it can be range bound, but we're just trying to collect the max gain in here or something, we're trying to collect income over this time frame as that option is decaying. Now, there is an earnings announcement here to be mindful of, but that's another reason why some traders, investors might use a short put vertical, giving them some spacing. I want to look at some of these here in just a second. I also want to highlight this as well. We're going to go through and look at the deltas, etc., and explain that in more detail here too. But look down here with me. This is a 150 level. A lot of these really interesting reversals in the market, and I've got about 4 or 5 to show you here today. But they've reversed off interesting levels. Now, that 150 level, it's kind of a big round number. I've seen stocks, bounce off 100, 150, 200 from time to time over the years that I've been in the market, and we did bounce off that level. In addition, if we did hold, let me just draw one other thing in here, and can anybody tell me what this pattern might be? We come down here, we bounce back up, and then we hold there. Without giving too much of the, well, here we go. I will give too much of the pattern away, but if we were to hold somewhere in here, what kind of a price pattern is that? Does that look like anything you might have seen before? Sometimes you get these off the bottoms too. They can be off big numbers. I think the money flow can be of interest here, but more buyers coming in. But there might be another pattern that could form if this kind of flag extends a little bit lower, maybe not even that far down. Love to know your thoughts on that. And Maligator's got it. Head and shoulders inverse. That is correcto. Yes, an inverted head and shoulders pattern. And a lot of times you get these, and basically it's just made up of a sharp reversal off that bottom. And there is the shoulder, the head, and the shoulder. Maligator, you got it. Nice job. And Naresh as well, you guys got it. Yep, inverted. Yep, that's exactly it. So we're just watching this. It is a bigger company. It's a bigger name. There's a lot going on with Google. Evidently, there might be some buying pressure within here too. But maybe we don't want to take it necessarily as a stock trade initially. Maybe we're waiting for the possibility of what? Maybe we're looking, somebody down the road might say, gosh, I do like directional stock trades, like a long call option, if in fact we did get an inverted head and shoulders pattern. And when would we know that inverse head and shoulders pattern is actually an inverse head and shoulders pattern? It's got to take out the neckline, right? Right there. That could be a confirmation level. Somebody might say, gosh, at that level, maybe they'll speculate and they'll say, they like long calls there. They think, we've gotten past this. We're into a new high range. The money flow did work out. Got more indications. That could be one thing too, right? Where they could do that. But in the meantime, how could we generate income, even though the stock's at a higher price, but do it in a little bit more cost-effective way where it's not as expensive, let's just say, for example, on a margin requirement basis, relative to just a short put only. The short put vertical could help us with that. Okay, as well. One other quick thing I'm just going to state, I'm going to zoom in because there are a lot of different confirmations that many of you do use. Let me just try out a couple more. If prices come down here, okay, and then you go, there's your low, and we close above the high, the low day, which obviously has not happened yet. In fact, I'm just simply drawing a diagram here, but in case we did close above the high, the low day, what does that mean? A K hold? That can be an early indication of a possible breakthrough rally. Some traders might be looking at that too. But what a cool way to have a position on, to be generating income and waiting and kind of trying to earn a little bit of income, perhaps, potentially, while you're waiting for a better setup to occur so that then you can select a more bullish option strategy. Okay, so that's what we're going to be looking at today with some of these potential reversal patterns. Let's dive in over here. Let's go to our trade tab. That 150, we looked at that 150. Now, a lot of times options, traders will go out on a short put vertical 20 to 50 days to balance out risk and potential reward, right? There's 51. I think that we're pretty close to that. We do have to go through an earnings announcement. These other companies, we don't all have to go through earnings announcements, but I'm just showing you the first one to highlight it. Yes, we do have to go through one as we look at it. If we're going to go through in November, you could always try to close out before, but keeping that in mind, okay? All right, so having said that, looking at the delta, again, the delta simply is a reflection of the underlying. If the underlying up top here, looking at the underlying, the last price, if it goes up $1, for every $1 increase in the underlying, the option will go up by the amount of the delta or down by the amount of the delta. In this case, we are on puts because we're doing an SPV, right? The trade we've elected initially, barring any additional bullish indications that might prompt us to choose a different, more bullish option strategy if we so choose to do so. Right now, though, it is the SPV. Now, in terms of a delta, also it can be an estimate of different, sort of a probability estimate of the price of the stock going down below a particular level, for example, in this case, by expiration. So here's your 22. We'll go ahead and say that 0.22. Sometimes traders will use this as a 22%. There's a 22% chance as it stands based on deltas, just the delta itself, looking at historical moves, etc., tied into volatilities and whatnot over long periods of time. 22% chance going down. Some people might like that. They might just like that, okay, because it's lower. Now, a lot of times traders will select a 0.2 to a 0.4 delta when they're selling options because what? They want that probability. Now, a quick question for you. That 150 that we looked at, did that have support on the chart? Short answer is yes, it did have support on the chart. Is that factored into this percent? It is not. So there could be, what traders might do is they might just look for ways to enhance potential probabilities of an outcome here. Now we've got a 5-wide spread in here. So let's just do a quick expiration of this. So if I just sold the 150 by itself on the put side, I clicked on the bid. What is the margin requirement on this one contract alone? Well, if I'm just looking at it, because we are talking about a $161 stock currently, margin requirement for one short put contract is about 3,600 and change. Now the credit's 252, but the max loss is 14,748. Now that assumes that there's the possibility of assignment, and generally that occurs when you're below the below the strike price by expiration. Now, as we read in the disclosures, you can be assigned, a short option can be assigned at any time, but generally speaking, if we're above that strike price, it's just a lot more likely, more likely that we're going to just collect the premium. And that's what we said a neutral trade. We want to hold above, let's say, for example, the 150. Well, that all stands true just with the short put by itself, because again, we're just selling a put. And so that assignment possibility is there, but I want you to keep an eye on this. The max loss, it's fairly substantial. Now that assumes that the stock has to go to zero, but still, it could drop because, for every one put contract that we're selling that are standard equity options contracts, which they are over here. Here's your 100. That's going to be equivalent to 100 shares of stock. So we'd be buying 100 shares of stock at Google upon an assignment. And if the stock really did dip quite a bit, well, that could equate to a fairly large max loss. However, if we hold the control button down, if you're with me, folks, everybody, hold the control button down. There we go. I'm holding it down. A good quick way to do this, if you select that, it will add to the position, and you get the confirm right there, right? I think many of you know that, but just in case, you get the confirmation. You want to just check and see what you're looking at is what you get. Now, I'm only getting 94-cent credit right now, but let's look at the dialog box again, see what some of our numbers are showing us. The max loss is a little bit different from 14 and change, 14,000. It happens to be 406 right now. So you'd have to say that is a lot less, right? It's a lot less. The buying power effect is a lot less than the 3,600 and change. Now, the credit's less as well. However, if we were okay risking a little bit more than this, and again, we don't necessarily have to, as long as the option market's open, we can try to close it out before we, reach a max loss level. But having said that, if we just go ahead and add another contract, 2 contracts, a trader could come over here and just see if they are okay with these numbers. The buying power effect has effectively doubled, and so too has the max loss. But we're still clearly under the 14,000 and change, right, for the max loss, and certainly under the 3,600 basically margin requirement down here. Have we gotten a little bit closer to getting the 240, the 254? We have. One more contract would do it if we were looking to get a higher credit. Of course, we still want to look and kind of compare everything else that we're looking at. Are we okay with this trade? So there's still a lot going on. I'm just saying that you could even add an additional contract, get close to the short put credit by itself, but yet still significantly reduce the margin requirement and the max loss. Okay. So let's go ahead and just submit this one for now and put that trade on. So we sold the 150 put, we bought the 145, and now we are waiting to see what unfolds as we keep an eye on this. And remember, you have to feel good about earnings too. We have an earnings announcement coming up, but this is just an example trade, right? We're just showing you what traders would look at. We're just recognizing that earnings are here, the potential for a price pattern, the potential for a reversal. And by the way, some traders might simply wait. I wanted to put a trade in here because we're in the class, but some traders might simply wait for that K hold to occur. They might also wait for, let's just say, for example, prices, shorter term prices to maybe cross above a 10-period moving average, just to throw out one more here for us. Did we slip below it slightly? We're still above it. Okay, so maybe they might be waiting for a bounce off that level. But look what we did do in terms of setting this trade up. We didn't sell the 155, which I'd kind of written out previously where we might sell at. We sold the 150. It was a 0.22 delta, right? And then we bought the 145 right there. So we sold this put, we bought this put. And so think about the flexibility you have now in terms of giving it a little bit of room for prices to, maneuver around, run through at these levels. And maybe it can come down a little bit if it does find support here for a possible inverted pattern, or maybe the flag pattern extends a little bit longer before you get a K hold or whatever. But here we are at 161. So we've given it quite a bit of room, not quite $12, 12 points, but some flexibility here. Okay. All right. Now, having said that, let's continue on with some other trades in here. MDLZ, also part of the NASDAQ 100. It has not gotten above its 10-period moving average, and that can be a signal because a lot of times you will get, when prices are really strong, it's interesting how much price action you can get right over here on the left-hand side. That's a lot of price action. And the stock just simply held, folks. Oh, yeah. Above the 10-period moving average that whole time. It's a lot of price movement. Did you get it over here too? We actually did. And we touched off it many, many times. Kind of acted as almost a springboard. And then finally you closed down right there. But look at the price action between here and here as an example. Just holding above the 10-period moving average, not closing below it. I'm pointing to right around 75. So it's not quite 10 points, but that could be something that's added in there as an additional confirmation. I just wanted to throw it out there to you because we did just slip below the 10 period. But what else do you notice in here? I'm going to take off the moving average for now, and you might see a flag pattern there. Yeah. Seeing a flag pattern. A good lift in money flow. Prices certainly coming higher here. More volume. You can see that volume coming in more recently right over here, but that is interesting as well. Now, some traders might be very, very bullish and say, yeah, I want to take this as a trade. Just maybe they like stock or whatever the case might be. Maybe they just do a short put. We're talking about options specifically, and we're saying, well, it hasn't bounced yet, but I like, for example, somebody might say, I like the pullback here in the price. Because what happens to put prices when the stock pulls back? Put prices do what, folks? What do? We saw it over here on the delta, right? Were those deltas positive or negative? They were, in fact, negative. With a $1 increase in the stock, the delta tells us that the option should do what? Drop approximately by the amount of the delta, this range in here. So that is a positive. And we've seen prices come down there, right? And it bounced right there. And so it bounced one time. And here we are again, right there, just below the 75 number, kind of slowing down. But have we gotten a close above the high to low day yet? No. The 10-period moving average just above it. Some traders might wait. But if we're just trying to play this little pullback here, it's sort of a little flag, sort of a pennant pattern. We can start looking for deltas down here too. There's some support at this level at 72. But where do the deltas, in terms of the 0.2 to the 0.4 stand? So we can also try to use that as a guideline as well. Let's see. Athaya says MDLZ below the 10 period and 20 day. Okay. So either of those two possibly, somebody might wait for additional confirmation, right? I've had a good conversation with Kevin on a couple of different classes, and I know he has an approach too that he uses where looking for a couple, 2-3 days of a confirmation as well. Now, some traders might elect to do that. That might push you though into a different option strategy altogether. Maybe just directional calls, for example, could come into play there as well. So, but it's all about, confirmation, what you feel comfortable with, and then selecting an option strategy around that is what we're after. Okay, great. All right, now a quick note too, there we go, a survey in the chat, folks. If you can take a second to fill that out, or you can actually just click on it now. That will help you. You can make any comments on there, any topic requests that would be passed along to Connie for sure. Anything you like about the presentation, whatever the case might be, love to have you fill that out if you're able to. And by the way, bottom right-hand corner of the screen, there's a subscribe button. If you smash that subscribe button, you'll be on board with more than 120,000 of our subscribers already. Love to have this content for you where you can see a lot of Kevin's great classes, other coaches as well. Connie obviously teaches a great class here each and every week. And yeah, and then if you find this helpful, this presentation, smash that like button. Thank you very much. All right, Well, with that, let's go ahead and take a look at our deltas right now. So here we go. Over here on the left-hand side, we are looking at that 55 days. We don't have to go out that far if we didn't want to, though. You know, if we wanted to do something ahead of, say, for example, earnings. When is earnings? Well, it's October 30th. How many days to expiration? I've got a great way to count this right off the chart. Bottom right-hand corner of the screen, just go down right down here to the left of drawing set where it says that. Click on that drawing tool and just make sure that you've got that trend line in there. And what you can simply do is just click on it one time, pull it all the way over to earnings, and it will give you a number. How many days to expiration? Well, the top number is calendar days, and that's the number we're looking at. So we could say it's 35 days, so really anything less than 35 days. You see that up top in the box? That's calendar days. The one right below it, as it says right there, the distinction there is bars, right? Days versus bars, calendar days versus actual bars. There's going to always be less bars because we don't have the weekends. So 35. If we didn't want to do that, we can come over here and say, what about this October weekly? There's 30 days to expiration. Oh, and there's a jump right there. You see it in your implied volatility, encompassing earnings. Now, you might not expect, you can do the same thing on Google, of course, too, on our first trade here, but we might not expect the kind of volatility from earnings on Mondelez versus a tech stock like Google. It's into AI and other areas as well. So maybe we don't worry about it as much. Maybe we should have, just a consideration. We could have looked at that on Google, for example, too. But let's just go ahead and look at those Novembers for now. So what do we have? Well, we've got a couple of things. This is always helpful. We certainly had this on Google in terms of the spread between the bid and the ask price right there. You can see down here with that spread, what's about a dime. It's not too bad. I mean, the volume can help us. We're over 1 million shares. That can help to facilitate more interest in option buying and selling. And also, too, might I add, the open interest column. Keep an eye on that. This is in the thousands range in terms of open interest. We've got in the 100 range as well. But that clearly is one of interest here. It's at a 35 delta right now. Why don't we look at the 7250 on the chart and just see what we've got relative to either, maybe potentially buying the put at 70 or at the 6750 strike. Those two strikes right there, either a 5 wide or a 2.5 wide. Let's do it right now. Where's the 7250 stand? So this is kind of an approach you can use. We looked at the chart a ton, but you'll notice up top here, let's weigh these comparisons. The max loss on this one is 185. You're making 65. Now, if we widen this out and we're right, it still holds above that 2750, and we collect the credit, assuming we get that, right? Let's just see what this looks like on the 6750. You're getting $1 credit, right? And the max loss is higher. It's a significantly higher max loss, but you're getting more credit there. What this comes down to is, what is your bias on the stock? Are you fairly bullish? And obviously, there could be more that we could look into. We could investigate further into Mondelez and find out for sure. What I'm going to do, I'm just going to kind of split the difference a little bit. I'm going to say, I'm going to go back here. I'm going to select this. Oh, and it's showing the drop down on my other screen. Sorry. But there you go. You got the 70 as opposed to the 6750. I've just flipped a 65-cent credit. I'm going to add one additional contract. And let's confirm it and take a look at it. We're still below the 400 in terms of a max loss. Are we not? Yep, we're below 400 like the other one in terms of a max loss. But look at this. The credit is now higher than 100. Buying power effect is less. So we have effectively lowered the max loss, but we've also increased the credit by $30 by choosing one that's a little bit further out, but just adding an additional contract to this as well. So that is one way to look at this. Let's go ahead and just send this through. Okay, cool. Let's do this. I want to highlight too just a couple of stocks. We're not going to have time to go through them, but other ones out there that are really quite high in price that could be clearly better suited for a short put vertical as opposed to just a short put in terms of margin requirements, max loss, etc. CDNS. S, there we go. Down here, a little bit of a sideways range, folks. Yeah, a little bit of a sideways channel through here. We're kind of towards the upper end of that range. Somebody might watch this for the lower end test, perhaps. That could be another one to look at. How about this? PAYX, another sideways channel. Now, here's earnings right here. Somebody might want to wait for earnings to pass. We've had some really good money flow. Just continues to go higher here as we've even begun to go sideways. But maybe some traders maybe they want to get out here. One thing to keep in mind, if you were bullish ultimately on a company like this, bullish to neutral, what's been happening with those option values as we get closer and closer to the earnings announcement? Well, implied volatility normally goes up ahead of a major event like earnings, and we are running up there. So premiums might be a little bit higher right now too. Of course, you might have to hold through that event as well. And the last one we kind of looked at earlier, Microsoft. Okay, who is trying to get things in place to open a 3 Mile Island right now because they need some energy, some cheaper energy through uranium to fund AI. An AI response for all these AI, the AI build out, very expensive in terms of electricity behind the scenes. And we know Microsoft, has a big component into ChatGPT. Just something on the side there I'd throw out there to you. But a little flag action there. And are we resting near a prior support level? Well, perhaps we are. Look at that right there. Pretty close, a little bit of a flag pattern. Keep in mind, folks, we are, once again, I felt like we just got through it. Turns out we did. Earnings about a month and a half ago, and we got another one right there. So it's coming up. All right, everybody. Once again, Kevin's posted in the chat. Absolutely. So follow us on X. We'd love to have you on board if you're not already. I do recognize many of you on there. Hopefully, I'm following all of you that are come to these sessions each week, but I might not know it. So that's why it's important to let us know on X if you're there. And be happy to follow you guys as well. Now, with that, again, just a quick reminder that there was a survey that came out earlier. If you get a chance to fill that out, I think it's just 2 questions, so it's very, very quick. If you're able to do so, something you liked or found helpful from the presentation, go ahead and click on that. All right, everybody. Well, on that note, it's been great being with you. Connor should be here next week, and look forward to future discussions. Have a great day, everyone.